The market is not looking too hot today, but as everyone is worried about red candles and tariffs, we had a curveball from everyone's love it or hate it meme coin factory. Pump.Fund's token, Pump, is holding up better than most today, showing us a bit of green in the last 24 hours. Trading near $0.00258 while the broader market has been having a nasty spill into the red since Asia's market open after the weekend. This is the native token for Pump.Fun, the Solana platform that makes launching meme coins dead simple. You upload an image, pick a name, set your parameters, and it's live on the bonding curve for anyone to trade right away. No need for coding or complex setups. That's why it's exploded since starting in early 2024. The platform's pulled in massive revenue from fees on launches and trades, with lifetime figures well over $900 million now. Those fees feed into ongoing buybacks that reduce supply over time, which helps support the token's value. Now, I get it, memes are a controversial topic, but we're here to talk about the Pump coin itself. You don't have to love it to trade it. The latest momentum really kicked in with their big announcement. They've launched Pump Fund, a new investment arm focused on early-stage projects. It starts with a $3 million build in public hackathon funding, 12 winners at $250,000 each, with $10 million valuation caps. Winners get mentorship from the founders, plus infrastructure support. The twist is, it's market-driven. Projects launch tokens, build openly on socials and streams, and Traction decides who gets funded, not just judges or VCs. They welcome ideas from any vertical, even non-crypto ones. As long as teams ship fast, communicate transparently, and let the market vote with buys. This feels like a real pivot towards sustainability, moving beyond pure meme speculation to backing builders who can stick around long-term. Check the Yahoo Finance piece on the Pump Fund launch for the announcement details. This kind of thing is generally good at driving attention towards the token itself, which is something every project needs right now. Looking at the charts, Pump has been in a consolidation phase after dropping from its all-time high around 0.009 back in September 2025. It's recently pushed above some longer-term resistance, holding support near 0.0020, and volumes ticking up on this news. Buybacks remain active. Platform revenue still generates meaningful flow, even if not at last year's peak weekly highs, and they've already offset a solid portion of supply through purchases. Social sentiment is cautiously optimistic around the fund, with traders talking about it as a step toward real ecosystem growth amid cooling meme volumes. Let's talk through the broader context. Pump.Fun has always thrived on Solana's speed and low costs, making it the spot for quick meme experiments. But as the hype cycles mature, competition from other launchpads has nibbled at market share, and daily token launches aren't hitting those 30,000 peaks anymore. Still, the platform's revenue dashboard shows consistent fees flowing in. Recent daily figures in the high six figures to low millions, translating to ongoing buybacks that grind down supply. That deflationary pressure is one of the stronger fundamentals here compared to many meme-adjacent tokens. The hackathon adds fresh narrative fuel. If it draws quality projects that gain real adoption, it could bring new users, higher volumes, and deeper utility to the token beyond just speculation. If Bitcoin and the wider market turns back around into the green, with this catalyst and Solana holding firm, short-term, we could test 0.003 or even 0.0035 in the next few weeks. That's hitting prior resistance levels on increased volume and positive buzz. Medium term, say 3 to 6 months, 0.004 to 0.005 seems doable if revenue holds steady, buybacks continue, and the fund starts delivering visible wins. To trade Pump and any other altcoins you want, head over to Weex with the link down below. Up to 30,000 in sign-up bonuses as well as a bunch of trading vouchers for signing up, depositing some cash, etc. They allow non-KYC trading, beefy security, and good liquidity. Check them out and grab those bonuses while you're at it. Optimistically, in a stronger market recovery where Solana pushes higher and meme activity rebounds, pushing toward 0.006 or reclaiming bits of that old high isn't completely off the table. Though execution on the fund and avoiding major setbacks will be key. And as always, Everything hangs on Grandpa Bitcoin or alternatively on Bitcoin dominance, surrendering to large caps and making way for plays like Pump. With the market caps around 1.5 billion now, with circulating supply near 590 billion tokens, there's plenty of legroom, but it hinges on sustained interest. But let's be clear on the risks. No sugarcoating. The ongoing lawsuit from Burrick Law is still active. It's been refiled and amended multiple times, with recent court deadlines extending into early 2026. Allegations center on securities violations and claims the platform operates like a manipulated system, favoring insiders. That kind of FUD can flare up and hammer sentiment fast. There's also a significant token unlock scheduled for July 12, 2026, releasing around 82.5 billion tokens, or roughly 41% of locked supply to existing investors and team. That could add serious selling pressure if holders exit. Fees have trended lower from peaks due to competition and adjustments, like recent changes allowing creators to split revenue across wallets to keep them happy, which might mean less aggressive buybacks ahead. If Solana weakens or overall crypto dips, or if daily volume falls sharply below recent averages, Pump could test lower supports like 0.0020 or below. Watch for any negative headlines spiking or breaks of key levels. That's when you tighten up or reassess. Pump sits at a fascinating inflection point right now. You've got proven revenue generation, active buybacks providing a floor, and this new pump fund injecting fresh purpose and potential growth drivers. It's not without real hurdles, legal overhang, upcoming unlocks, and shifting competition, but if the team executes well and the market cooperates, it could reward holders who stay patient through the noise. If you're considering a position, don't forget to check the link below for those bonuses. Stick to trusted exchanges, always use stops to manage downside, and only risk what you can comfortably lose. This is just my current analysis. Dig in yourself, cross-check the data, and trade accordingly. If this breakdown was useful, hit the like button, subscribe for more updates like this, share your thoughts below, and I'll be back with the next one.